Hi everyone, welcome to Weekly Digest with Fibonacci X. This is a bi-weekly episode where we discuss the recent deals in the venture space in India. We cover early stage, growth stage, late stage deals. We try to dissect the logic behind deals and some of the stories around and the success stories around the startups which get funded, right? So you can always go back to the channel and watch the previous episodes. We will also include the link in the description. Uh, let's begin for this last 2 weeks.
So for this week, 34 startups have raised funding, out of which 24 were in the early stage. So early stage means pre-seed to Series A funding. Nine out of the 34 were in the growth stage, which is from Series B to pre-IPO stage, and one startup raised, which was in the late stage, which is the pre-IPO stage. So let's start with Snitch.
So now we are discussing a Snitch, and the good thing is that it's a profitable B2C fast fashion startup. To all the people who are hating on all the consumer brands lately, a lot of flack has been given. Even our senior people in the government, including senior ministers, have spoken publicly that we should not make healthy cookies and other things and focus on deep tech. My belief is that both can coexist. Tech businesses and tech enabled businesses both can coexist. Right? D2C is tech enabled, right? So somehow the tech is being used, whether you talk on the consumer analytics side, whether you talk about supply chain, about delivery, return orders, processing payments, all that is tech enabled. So I don't see them as in silos. I see them one enabling another. So there is technology startups, and then there are technology enabled startups, which could be consumer facing, which could be B2B. So that was my take on that. Like, so I'm not in that debate whether which is we should do only this or we should do only that. I think we need to do both. Uh, I don't look at any business in 2025 as a standalone business. Every business is a technology business, right? If you are doing a startup in 2025 and not thinking about AI, not thinking about tech, then you are not going to be successful, right? You're not going to have that competitive edge in long term. Snitch for me, what is good thing about them? One is it's profitable, right? And I think this round they have raised around roughly 340 CR in a mix of primary and secondary. Roughly 280 has gone to primary and 60 to secondary. What it also means that some of the early investors have gotten exit. There is some liquidity event. So this is a Series B, and early stage investors have gotten exit. And what is more surprising, the last valuation was 500 CR, and this is at 2500 CR. So it is 5x. Somebody who came in the last round even got 5x. So imagine if somebody came at pre-seed or seed, then what will be their exit multiple, right? So it gives, sometimes these kind of stories give you conviction and confidence that startups are worth caring about. Even consumer brands, you cannot write them off. And primary investor, I think now it's mostly strategic. So 361 Estate, which used to be Mumbai Angels, they have put in money. And Vedant Fashion, which is owner of Manyavar. So Ravi Modi, who's the owner of Manyavar brand through Vedant Fashions, has also put in money. So strategic investors have come in. Now I think the focus will be to take this profitable business to the main board IPO, right? So I think VCs still hold sizable position. So I think SWC and Ivy Cap probably own 10% or more than 10% each. Um, if you look at their revenue, I think last year they were doing around 240 CR and they had a net profit of 4 CR. This time the revenue has doubled and the net profit has jumped probably 10x, right? So that's a very healthy, sustainable business. One of the things probably I was thinking about their online offline split. So roughly, I think one third is coming offline. They may have, I think, 40, 50 stores, which they may want to probably increase with this funding round. Right? Um, I have not been to a Snitch store so far. So I just looked online what is available. Um, so one of the things is that they will be competing with Zudio, H&M, Zara, likes of these, right? But the fact that they are profitable, uh, that gives me a lot of hope that they can be IPO, and they are also looking at expansion outside India market, which is good. So it will be one of those case studies where the consumer brand is going in fashion and clothing from India to other markets, North America or Europe, in fast fashion, which has not happened. I don't think there is any D2C clothing brand which has gone from India to global for Gen Z. So this one, I'm really looking forward to this, how the journey unfolds. Um, Sorry, profitability, I think increased 5x. I just checked again. So they may have done 600 CR. The numbers have not filed for this year. 600 CR, and then I think probably 25 CR of net profit, right? So from the IPO story wise, it looks strong. So I don't see any challenges going for IPO. They may need to do like one more round depending on the uh, number of stores they are opening and the cash they are burning. But as such, company is profitable at this moment. So I'm very positive. I don't know what are your guys' thoughts, but IPO story looks solid as of now.
I think the clothing industry itself has high margins, right? It all comes down to how you market your company, how much you can drain your marketing costs, and how good your distribution is in terms of that. So, as a product itself, it's quite profitable. So, they must be doing very good works on reining in the marketing cost and having good distribution. And since in this round they have got like backings of very strategic partners, I think it's gonna get better from here on this point onwards. Okay, so I think we can move on to the next
Yes.
startup, right? Yeah, so next one we have Cred, which is kind of the poster child of the premium fintech in India. I remember when Cred was launched in 2018, there was a lot of buzz around it because of the exclusivity around it, right? It's a premium fintech because I don't know right now, but in the initial days, based on your credit or CIBIL score, I guess, or credit score, yeah, if it was not above 750, you would not be able to get into Cred. And Cred began as a platform where you could pay your bills, collect points or credit card bills, then collect coins. And they were very good at gamifying it. So the coins that you got, the credit points, you could spend it to buy products out there, right? Now, I was able to join Cred just last year. I was not eligible. So I used the product over a period of 12 months. And you have just heard about it, right? Now, when you start using it, you understand how Cred works. For the first 3 to 4 months, I was hooked onto Cred. I could see why. The UI UX is fantastic. It's very good. The gamification is catches your eyes for some time. Maybe your thoughts like if I pay through this, I might have the lottery system of getting 1,000 rupees cash back. That plays with your mind. But what I realized is that behind uh, those gamification, the actual reward was very small. Like if a high net worth individual or premium customers who are like earning 30 lakhs, 40 lakhs, 50 lakhs, maybe a crore or two, if they get in, these kind of things may be able to catch your attention and keep you retained on the app for some time. But getting 4 to 5 rupees cash back over a long period of time is not something that I get excited about. So what I found, and I also went back to the user experience in the internet around Reddit posts, around what users are saying, and they were mainly using this for, as I wrote it down somewhere, They were using it for the good UI UX. They were using it initially for tracking the payments of the credit card, which Cred is fantastic at. They were initially very enthusiastic about the rewards, but that died down over a period of time, right? So this can kind of reflect in the valuation which Cred had right now. The interesting point about Cred this time is that in the previous round, 2022, it raised at a valuation of $6.4 billion. And this time around, there has been a 50% cut in its valuation, which reflects that you can have a good UI UX, you can have a very good strategy of onboarding clients and keeping them. But if the product does not have any fundamental value behind it, I'm sure it has fundamental value for a lot of B2Bs, but as a user, I used it for 3 to 4 months and then I backed out. Um, I don't use it anymore. I still have the app on my phone, to be honest, but I don't use that anymore as much as I would like to. So that reflects in the valuation and in the recent, even the revenues, right? Cred had a growth of 66% revenue in FY24, almost 2,700 crores, but losses also went up by 22%, right? So you also need to show to the investors that you are able to rake in profits, not just revenue, and not just have a good UI UX. Kunal Shah is a fantastic uh, I would say not a promoter of his company, but a person who knows what he's doing. But until you don't get the numbers right, it's very natural to see the investor valuation and investor interest go down. Because Kunal Shah himself, through via his family office, QED Innovation, shipped in almost $19 million, which was around 25 to 27% of the round, right? And I get the point that Kunal might have done it to show that he himself has belief that his startup will work, and they are planning to do an IPO 2 years down the line. And he said that in FY26, his first priority is to get Cred into a profitable position. So they are already starting to curb the marketing expenditure, which is the biggest chunk of the expenditure, and they have moved a lot into P2P lending, into insurance, into loans, insurance and fast tax and bill payments, right? So he is looking ways to monetize credit more than it used to be, whatever it was initially. And it will be interesting to see because Kunal is going quite heavily into credit with his own money, with his own, I would say, name. And he's very sure that he can turn it out into a profitable company in the next 2 years and probably into an IPO in next 3 years.
What will be the revenue mix now? Will be going forward, will be largely from lending. Do you think so?
I was looking at FY24 and almost 85-90%, if I'm correct. I was reading a report that it was via lending, the revenue, and they're heavily moving into P2P lending, which is interesting. Like P2P lending is difficult because you need to regulate it very, very well, or else there is high chances of not getting your money back. So default rates might be high. So it all depends on how, and honestly, P2P lending is something which is not been cracked yet in India, if I'm correct. I know that people are very skeptical about lending to via P2P platforms because there have been delays in payments. There have been people who get through the loans and they have no intention of giving it back. So regulating the industry is pretty difficult. And Cred entering that shows that they are they are badly looking into various channels to earn money, which is kind of risky. But if it pays off, it will pay off well for Cred. So right now, yes, they are earning and shifting towards more towards lending as a source of revenue, which is very interesting because initially it was more if you look at the initial product, right? It made you feel like it was basically a premium fintech, right? You were not even allowed to enter credit, and now the entry barrier has reduced for sure. People are getting into credit more easily. Not only the people who are sitting in Bangalore and Delhi and earning 80, 90 lakhs, there are people who don't earn that much. I have a friend who earns maybe around 14, 15 lakhs per annum, and he is able to enter credit. So there is definitely a change in their marketing, their brand image, and I think that's related to the revenue part and the profitability.
Got it. Got it. Got it. And what about the valuation cut? What is your final take on that?
I think it boils down to the numbers on the paper. If they had profitability, if they had a bit of this thing behind what they are doing, uh, I would have been surprised by the valuation cut. But I can see why the valuation cut is there in the first place. Um, like I think it's just down to numbers on the paper. They need to become a bit more profitable. They need to cut down on their marketing spend because last year they spent all boatloads of money on IPL sponsorship, right? So I mean, you can market to a certain extent, but okay, like you need to also cut down on the marketing and make the product itself profitable after a certain point of time. And they have been in the market for almost 7 years, right? 18, say 25.
Got it. Got it. I see that as a sign of you know maturing ecosystem where people are realizing that what we had raised during the peak of hype cycle that is not justified anymore, and founders coming accepting that reality and going forward with down rounds.
Hmm.
So I don't look at that as a negative. It's just that it's part of a mature ecosystem that now the environment has changed, cost of money has changed, cost of borrowing has changed, cost of funding has changed, and founders finally accepting that, right? And investors, existing investors, also accepting that what stake we hold because they are at loss, right? Because they had
Yeah.
invested at a higher valuation, and how the dilution affects them. I'm sure they had some protections built into the SHA, but still, it's good to see at least people sticking to previous valuation or even doing down rounds. Right? I see that as a positive sign rather than a negative sign.
So let's move on to the next startup. So the next startup that we'll be talking about is called Gully Labs. So Gully Labs is a premium design focused sneaker brand. What stands out about this brand is that it combines aesthetics with Indian cultural with the Indian culture, such as their fulkari embroidery or their silhouettes which are attached on their sneakers. So they have raised approximately $900,000 in equity and $120,000 as venture debt. So one thing that is good is that they have raised funding from angel investors like Vivekanand Halekare, who is the CEO of Bounce, and Suhani Sampath, who is also the co-founder of Yogavar. So I think in the news which they have released, so they have generated approximately 15 crores in revenue since 2023. So this is just my observation about the brand is that since I love sneakers, so I have been following Gully Labs since they have been since they have started marketing and putting on content. So I must say before they had launched their first sneaker, the range of the first sneakers, their ads or the teasers which they were putting were very nice. But when the sneakers were actually launched, I was a little bit disappointed with what they had launched in the collection, not because the designs were not so good, but the designs are actually pretty good. But the reason is that it kind of looks like a combination of Onitsuka Tiger with an Adidas Sambas, with some of them standing out with a different design. But this is just an observation which I've taken in. Now, there is no issue with that, but the pricing which they're charging is kind of similar. So you can say with an Adidas Sambas, maybe not an Onitsuka Tiger, but the pricing is almost similar. So they're charging 7,000 to 8,000 rupees right now. So in terms of pricing, they would stand between a Nike Air Force Ones or the Comet, where a Comet costs around 3,000 to 5,000, and an AF1, which is the Air Force One, costs around 8,000 to 11,000 rupees. So I think from what I think is that the brand had pre-launch was very good, where it had generated hype even on Reddit and on Instagram. But right now, I'm not so sure about how the brand is going about their, even though revenue has been there, but if you read about the brand's review on Reddit, so it says that the shoes are uncomfortable, it's a little bit disappointing. So they have their bad reviews as well as good reviews, but like people usually focus on the bad reviews. So this is the kind of observation that I've had about the brand.
Okay, so next we discussing Udaan. So Udaan also seemed like Cred. I think they raised at the same valuation as the last time. For this round also, I think they raised at $1.8 billion, which is better than down round, but it's as good as down round because your GMV as a B2B marketplace has gone up, but you're still raising at same money. So it is like a down round, right? So typically, Udaan is a B2B platform which connects suppliers and retailers. And I think their GMV is around, at this point, should be around 6,000 crores, if not in that range. And it's not a profitable company, it's a loss-making company. I think they must be making loss of around 1,500 CR or something. Again, this is again on the way to their IPO, and they are also focusing on profitability for next year and half. I think out of three co-founders, two are not involved in day-to-day operations anymore. The third one is probably managing as a CEO. So that two of them have probably moved into their still shareholders. Probably they're in the board role or something. I'm not sure. There's an interesting report which I read a few years back, probably 3 years back, which I wanted to share with the audience, which everybody should read. So the report is called "The Rise of Digital Bazaars in India." It's in collaboration between Excel and Bain Capital, I think Bain Consulting. So this is the report. This came out in 2022. This is a good primer for anybody who wants to understand the B2B platform structure. So these are the Indian marketplaces which have evolved, which have emerged over last few decades. Out of this, let's say Wazir X is already in trouble, as we all know. But if you look at the kind of marketplaces which have emerged, including horizontal, vertical, B2B e-commerce, edtech, food delivery, automobile, fintech. And this is just as a sheer outcome of India being a unstructured, chaotic, unbranded market where you can do this into B2B space. And this includes consumer, finance, food, commerce, everything. There's a marketplace model for everything, right? So this is an interesting, even professional services. You have Urban Company, right? You have Book My Show for booking tickets. So anybody who wants to learn about marketplaces in India, we'll put the link to the report in the description as well, right? So when a founder is thinking about a marketplace model, right, what kind of things they should worry about? Right? These are some of the factors. Is the timing correct? Right. Obviously, that is true for any business model, but in marketplace, because you are a lot of time you are solving for both demand and supply, so you have to be little careful that is the marketplace the right model to build, right? And then identify the two constraints. Here they have used the example of Spinny, which is a good example. If you look at the Spinny's supply side, it is individual car owners. So it's not something which you can consolidate. You have to acquire one car after another car. And as a car owner, I'm looking for, it's an opportunistic sale for me because I'm looking for the highest person who is willing to pay me the highest amount of money, right? So as a brand, you need to work on the demand side as well, because unless you have willing buyers who are willing to pay premium to you for used cars because of your brand guarantee or whatever refurbishing, you cannot pay the seller the price he's seeking, right? So it is not very easy to build that marketplace. So Spinny focused on the buyer experience first because they knew that once they can charge top rupees to the buyer, then they can buy cars. Opportunistic purchase is easier to close for them, right? So there are many knowledge nuggets in this. They, I think, highlight 8 to 10 such things. Stickiness, is there a profitability? Do you have a defensible moat to build a marketplace, right? So these are some of the factors if you want to build a marketplace model. I recommend building this report because this is very India specific, right? And it gives a lot of insights into what has happened into the marketplace model, right? So that we can do. And even from the funding and growth perspective, there are a lot of uh, knowledge pieces which you can pick. Even if you are, let's say, putting together your deck, you can look at a report like this and actually use some of the keywords, like what is important for building a marketplace. So the idea of sharing this report was that as founders, sometimes we have an idea, but we don't know how to articulate it, how to present it to the investors. But if you can look at the literature which is already available from the investors about similar business models, the pitch becomes more palatable. So it is not just using the jargons, it's just translating how your business idea creates value in 5 years, 10 years from now. How can Udaan become a IPO journey between 2016 and 2028 or 2030, right? That's what the story would have been when they were going for Series A, Series B, right? Now they're at Series G, so now it's more realistic. But even in the earlier days, they would have, uh, you know, spent a lot of time how to articulate it, how to think about the demand side, how to think about suppliers, how to think about retailers, what will be our defensible moat as a marketplace, right? So this kind of literature, I think a lot of time when I am looking at pitches, founders often miss out, but this is available for free, right? So it just takes 1 hour of Google search or Chat GPT, and you can extract a lot of, so it's like a low hanging fruit. So I think this report is interesting just in the Udaan's context to understand how they have been able to scale and what is their defense and what is their journey forward. So I highly recommend this. We can add this to the description as well, but this is something interesting. Yeah.
Okay, so I'll start with the next one, which is Surf Club. It's interesting because just the previous week we had a discussion with one company who is raising funds, and they were Quadwork, a very similar company, but Quadwork was doing much more than what Surf Club does. Surf Club began, I think it was founded by 6 college-going students in US, and they are doing business right now in New Delhi. They are primarily into creating, I would say, good paddle or pickleball club rackets. Sorry. So right now in the market, I mean, I being a pickleball player, I go to a shop, any shop to buy a paddle or pickleball racket. There are 3 price points that I notice. One is the locally made, very cheap, or maybe Chinese imported, which goes for around 900 to 1,000 rupees. And the other one is a high range racket, which is imported by companies like Babolat and other tennis racket makers. They have also entered the pickleball racket manufacturing. These go from anywhere from 12,000 to 15 to as much as 25,000 rupees. And they are, I think, fiberglass based, if I'm correct. And then you have the mid range, which is basically anywhere from 3,000 to 9,000 rupees. And there's a lot of competition there, and that is a sweet spot for majority of people who want to buy pickleball rackets. Why is this a big deal? Pickleball is one of the fastest growing sports in the world, and also in India. It's expected to grow by almost 26% per annum. Currently, there are estimated 50 to 80,000 pickleball players in India, which is estimated to rise to almost 10 lakh players in the next 5 years. That's huge. That's huge. And the reason, the barrier for growth right now only lies with infrastructure. So there are a lot of companies in India that are into infrastructure development for the courts, and there are individual businessmen who are leasing out the courts and creating a court and then having pickleball services given to people, right? So now, when it comes to the pickleball rackets out there, Surf Club wants to hit the range of 7 to 9,000 rupee uh, ergonomically designed rackets, and they are going to be US APA certified pickleball paddles, which is a standard which is, I think, one of the top standards for having the pickleball rackets throughout the world. Now, when you look at this industry, it's growing. Yes, people are buying rackets, they're playing pickleball, and I don't see a reason why they are not going to, like, grow if they make they expect to have a 20 to 25% month on month growth in sales. And it's a very small round. It's, if I'm correct, it's undisclosed round, and they wish to put most of the money into R&D as well as uh, R&D as well as, I think, marketing. So the interesting part comes into play that it's a seed round, it's a small round, it's being developed for the rackets, and there are just three marquee names that are behind it: Manish Podar from Rare Rabbit, Pratham Mittal from Masters Union, and Malika Sadani from the Mom School. The interesting part is that it's not just pickleball players. Maybe they are players, I don't know, but they are industry stalwarts from other kind of industries that are coming into investing into this sport. So pickleball is not only becoming popular among players, among uh, I would say citizens of India, it is a very interesting perspective and viewpoint from investors as well. Um, Quadwalk, Surf Club, there are multiple things coming up, and the industry has grown, especially in the West India. I remember I stay in Baroda right now in Gujarat, and 2 years ago there were only one or two pickleball courts in Baroda, and these were mainly by expats who had come to India and began the courts. Right now, within a 1 or 2 kilometer radius, I know 8 to 10 courts around my house, and that's just Baroda. Ahmedabad is even bigger, and it's catching up in Maharashtra. So people are realizing the growth of the industry because it's growing rapidly. It is yet to catch up in South India, and probably, I think, it's catching up in South India. It's yet to catch up in East India. North is also catching up. If just out of the top of my mind, I remember that the two startups that we're talking about, it's based out of Gurgaon and Delhi, right? So the epicenters are around Maharashtra, Gujarat, and Delhi for startups and the businesses that are occurring right now. So yeah, very interesting sport. I love the sport. I play it twice or thrice a week. Very convenient because you don't get tired. You can play for 1 hour each day and go back to office next day. And yes, I see the sport growing. I see the startups that are joining the different aspects of the whole chain of the pickleball, be it production, be it infrastructure, be it rackets, be it services. It's bound to grow in the coming days or coming years.
What do you think about these high-profile folks uh, generally funding a startup? Is it helpful in your opinion, getting these high-profile people on the cap table?
I mean, it depends. Like, I remember Dorje Tees, the founder, he bought in a high profile. I don't remember the actor's name. The actor had a cap table where he got discounted shares, and because he was helping out with uh, the marketing stuff. But I feel it makes sense for high profile people to come in, especially if they are relevant to industry. If it's not relevant to industry and if the founder is raising money, for example, let's say, I don't know how good example this is, but let's say um, Dhoni investing into, I think, Gensol or something, if I'm correct, which had very huge crash in valuation, right? So if founder would have given shares to Dhoni thinking that maybe he's going to help with marketing, that might help to some extent. But I would rather have someone give marketing and provide me strategic help rather than getting someone high profile from certain particular industry that I would use for marketing. I mean, it's no harm in doing that. I can see the reason behind it, why people want someone high profile to come and market their company.
So next one, we are going to discuss Groww. Everybody knows about Groww because I don't think during COVID, a lot of people jumped into trading, stock market, and somehow people think it's a place to make quick money. So that's also interesting. Uh, for Groww, again, it's a IPO story going forward. I mean, they obviously this place last year's numbers, if you see, were largely result of what SEBI had changed around futures and options trading, and that had affected platforms like Groww, and they'll be probably they are direct competitors to Zerodha, Angel One, the competitors, right? And it's interesting because now they initially, I think they started only as a mutual fund distribution platform, and then later they are now doing everything on the wealth side. Um, this time we have a sovereign fund from Singapore, GIC, investing into them $200 million, and I think they also moved from Singapore to India, right? I think earlier they were registered in Singapore, if I'm not wrong. So they, I think, reverse flip from Singapore. Um, so financially, the company is very strong as of now. Um, they have already filed for their DRHP, red herring prospectus with SEBI. The IPO will be managed by JP Morgan, Kotak, Citibank, Axis, and Motilal. So I think it's going to be contested for by the investors. Revenue wise, I think they are doing around 4,000 crores odd revenue, and the current valuation was at 7 billion. Since they have already filed for DRHP, I think this is the pre-IPO round. I don't think they'll be raising anything before the offering between now and the IPO. So this will be probably, I'm not sure how much of this was primary and how much was secondary. That will, because a lot of time early stage investors like to dilute at this point. Maybe founders also diluted part of their stakes before the IPO. That gives them some kind of liquidity, right? So overall, I think it's going to be 3, 4 major players in this market, given that we have, as a proportion of population, the number of people who are actually doing online securities trading is still less when you compare to other developing middle income countries. So I think uh, there's still space for other people to enter into the market. The positioning, I think, if there is any founder who's thinking about this, the positioning has to be very, very clear. You can't do it all anymore, because these guys, let's say Zerodha and Groww, they are sitting with large profit pools now. So if you try to do anything, if a company is making 2,000 crores of profit in a year, it's very difficult to compete, because they can out allocate you on capital front, and they have enough cash flow and they don't need to raise money. It's just that, or they can just straight away buy you, or different tactics to sort of keep the competition away. But if there is someone who can think about a niche, maybe a particular asset class, or I don't know, ETFs or something like that, like very, very niche, or SIP, mutual fund. I think mutual fund is already a crowded space, but I would say there's still scope uh, for other people to be in this market. The profit pools tell you that story, that the other people can enter this market. Again, regulation wise, it's not the most friendly markets to build in, dealing with SEBI, and it's not the easiest regulator. I mean, they are friendly, but they are very good at what they do. So for young founders, it's not easy to navigate SEBI or RBI, etc., etc., right? So from IPO side, I think similar to other two startups we discussed, the story is clear. Large book runners are already going to be placing this round. I think GIC is going to make a lot of money to the IPO. I'm sure some early stage investors got liquidity during this pre-IPO round as well. So nothing the traditional marketplace for securities. I don't have anything unique perspective to add to this. Uh, but looking forward to the IPO, for anyone who is planning to invest in IPO, just study the historical numbers. Retail investors are always on the loss. So this is not a financial advice. We are not a influencer platform, but still just carefully study what has happened to the IPOs between 2020 and now. There was the stock price on the main board the day it got listed, and there is the stock price now. I'm not recommending or I'm not saying don't go for this, but just do your homework. Don't go for, don't have that hard mentality, right? So, but otherwise, I think just because the revenue pool was large enough, that's the sheer reason why all these three players can operate profitably, right? Zerodha is profitable. Not sure about Angel Way, but Groww is profitable. I'm sure Angel One is also making money because they also do broking and research also, right? Um, and I think Angel One should also be profitable.
I think I have,
Okay.
and I can just cover up quickly.
Sure.
It's called the Tarzan Way. Not much information on them. I just went through their website, and the round is very small, $240,000, which is almost 2 crore rupees. The investors are Inflection Point Ventures, Prateek Maheshwari, co-founder of Physics Wala, and Your Trips Limited UK, which is, I think, a very strategic investment from them. So the Tarzan Way is actually a good story of how a founder pivots when the situation and the times are not going with them, or maybe they get an idea which they capitalize on. It began in 20, actually, it began way back in 2016. That time it was called something else. It was mainly for homestays in Delhi. And for the first 3 to 4 years, there, according to the website, they made good connections to travelers. They understood deeply what was the issue that travelers coming to India faced, how could they solve them, and that 3 to 4 years experience gave them a launchpad in 2020 to start the Tarzan Way, which is basically AI meets India's experiential travel boom after post-COVID, right? So it is basically an exploration app and a curation app for travel. It leverages AI engine, human concierge, and makes a travel plan, claim to make a travel plan within few minutes, which is great because if I am traveling right now, I'll have to go to Airbnb to book a hostel, house, or hostel to book a hostel, or to the flight places to like airlines to book a this thing, and also to individual blogs, websites, and all to check out what places should I visit. I don't know if they're solving the flight issues or not, but they're definitely solving the experience issue. That you can stay here, you can do these things. It's very curated, and if you go to their Google reviews, which can easily be manipulated, but it seems genuine. It's 4.9 out of a few hundred people who have reviewed them, which is very high, which shows that customers are generally happy with what they're doing. So now, good thing is that they have a 300% year-on-year growth and have processed almost 13.5 crore of bookings in the last 2 years. They have 70% month-on-month growth from the last financial year, and their content view is almost 10 million plus on the reels, posts, and social media channels. So it's definitely a growing company, a company with experience, and they're going to use, I mean, they're not exactly specified how they're going to use the fund apart from making the platform better, which is kind of buggy. I realized that today when I went to the platform and tried to type in the place, it is not exactly the best. But yeah, that's what I see. And given that Indian people are ditching places like Goa, and then there is a hue and cry about ditching Maldives and going to, let's say, Lakshadweep or Andamans, right? Getting more local, getting more offbeat places in India. I think this AI powered startup can be great if they're able to understand and refine the, I would say, suggestions and make a good, better UI UX than they have currently. It matters. UI UX matters a lot. I do see them growing in the future. I wish them the luck. I would probably try to see what they're doing. And there are competitors, yes, there are competitors who are entering this position. If I look at indirect threats and competitors, there's Make My Trip experiences, Instagram travel creators who give out their own channels. Then there are direct competitors like Thrilophilia, Not on Map, India Someday. Surprised if they get acquired by Make My Trip or some other big company if they do well.
Yeah, it could be an acquisition play. That's what I was thinking in medium term. A lot of these companies, these founders are also clear that they may not be able to survive in long term. So it's usually a 3 to 5 year play where they're able to show some progress and then sell out. So I think this is it for these last 2 weeks. Thank you for watching. Please check the links in the description. We'll be adding the links to the reports which we discussed, any other material which we have referenced. And please subscribe and share our content. And we'll be back after 2 weeks. Thank you.